I guess this, I want to come back to this higher level theme, which is, when we juxtapose, these sort of regulated digital dollar stablecoins versus envisioned public sector central bank digital currency, how much of this is a payment system innovation versus something that actually really has an impact on the actual sovereignty of money issuance? Because I think about stablecoins as protocols and formats for the use of sovereign money on the internet, and as fundamentally a very significant, payment system innovation. It's more than a payment system innovation because of the programmability and all the things that come with that. But I think there are others that have a view that if there's a token that represents a dollar and it's issued by someone in the private sector, well, that's not the role of private sector. And where are we in this? Is this a payment system innovation? Is there, can the technology be created by, operated by the private sector, or open source combined with the private sector, combined with public sector supervision and engagement? Like, where do we sit in those trade-offs? Bob, I'd love to hear your thoughts.
Yeah, I think this goes into, Jeremy, some fundamental questions of how are you approaching this problem? I think you can make it where it is exclusively a payments innovation, a pure technology innovation, where you don't change the intermediary stack, for example, right? So you can keep the current system where the central bank creates the money. That money goes to a commercial bank, which has a Fed account, and they use their leverage ability to effectively 10x that money, if you will, and create through lending, right? And the rails change a little bit, but the underlying intermediary structure doesn't change. And that can make certain types of money more interesting from a programmability standpoint. It can make the rails more resilient, theoretically. It can make them more efficient and more safe. But the overall monetary system isn't changing. And for most people, the monetary system works pretty well. I think what the stablecoin approach, and we certainly discussed this when we were at Circle, is it takes the money outside of that constrained environment, or that limited environment of the commercial banking. Even though most fiat-backed stablecoins are ultimately commercial bank deposit tokens, if you will, it lets them leave that environment, and that can be really interesting. Certainly there are people for some reason or other who are not in the banking system. And that is a critical challenge for the Federal Reserve to address, and for all central bankers to address. How do we make sure financial inclusion is at its maximum? And we need to get better at that. And so we need to explore some of the type of technologies that Circle has explored and your peers have explored to understand how do we reach that 7% or so of people who for some reason are not part of the banking system. And the good part about this project with MIT is we're trying to look at all those policy levers and what can folks like Neha do and our team do that can make more people in the system, or can really fundamentally change how people access the system.
Kai?
Yeah, one thing I'd add is we've kind of started with really closely watching the rapid growth of the stablecoin ecosystem across the world, and I think one thing that's really stood out has been the emerging kind of global vibrant developer community that are building new products and services on top of stablecoins. And so I think you could argue that stablecoins and public blockchains, they can help lower that barrier to entry to building new digital wallets and financial services. And that's great for consumers to have more options in innovative products. And we're starting to see this with our business today. Just with we launched this FinTech Fast Track program last summer to make it easier for startups to partner with Visa and issue Visa credentials. Almost a third of the companies that are coming to us are building on digital currencies in some way. So we're really excited about it as really a platform that developers are using that could build new products and services that can then help address financial inclusion.
Yeah, I mean, it's fascinating to watch. Obviously, and seeing, you know, a smart contract based stablecoin that people trust, that it's essentially an open API for dollars on the internet. And it's amazing to see what people are doing with it. So, I mean, we've seen hundreds and hundreds of companies innovating on USDC, and like they don't have a relationship with us or Coinbase. It's just like they're just building, and we're in the, you know, we're in the very early stages of the innovation curve of programmability. And look, there's going to be bad things that happen. You know, I say it, but like there, you know, we've seen, you know, DeFi contract hacks. We've seen all kinds of things which, you know, if this was sort of the official system of dollars in the economy, we'd say, whoa, hold on a sec. But at the same time, you know, the rapid pace of innovation is obviously really, really significant and commendable.